All right, it was a flat trading session today, but if you looked under the surface, it was anything but flat. Man, the market was up, it was down, it was up, it was down, and it sold off into the close. It's making you wonder, is the market trying to find a little bit of a bottom here where you have the shorts that are trying to cover, you have the dip buyers that are trying to get long, yet you have some people that are still willing to be aggressive enough to drive prices back down lower. For me personally, I actually covered my shorts today. Didn't want to at all. I was really hoping we could get a nice flush out of the long positions of others and be able to cover at a lower price, but couldn't get it. The market decided to bounce a little bit, and I wasn't going to get squeezed much higher. So I closed out my QID position, I closed out SH, and I closed out RWM. Did it all for profits. The best one was a QID. One for one, it was a 2-to-1 leverage position. So I made about 14% on the final third of that position. And overall, I think it was like 13% overall on the trade that I made. So overall, it was a pretty good trade. But are we in store for a bounce day? I'm going to talk about all of that here. We're going to go over the charts. The volatility index is pretty interesting as well. Plus, make sure you're pounding that like button and subscribe so I can get your questions. Shoot your charts or your questions that you want me to go over, or more specifically, the stocks you want me to go over. I'll do technical analysis on all of them, and we'll stay here as long as I got to go over them all with you. So S&P 500 was up 0.2%. The NASDAQ was up 0.1%, and the Russell was down. Actually, the NASDAQ was down 0.1%, and the Russell was down 0.4%. So really is a flat day, especially considering like some of the price action that we've seen of late. Now, after hours, we're getting a little bit of a pop in the tech stocks, particularly because of Facebook reporting earnings and Qualcomm reporting earnings. You have Facebook reporting 27.9 billion versus 28.2 expected. Then you have, and that's a miss, but then where they really did well is with the earnings per share. They came in at 272 versus 254. Qualcomm, they beat on like everything. They did really good. Both of them are trading higher. Facebook is trading like 12% higher after hours, but Qualcomm 11.2 versus 10.6, and then 323 versus 291 on the EPS. So pretty good and much needed earnings reports from the market. Now tomorrow you have Apple and Amazon, and if you're looking for some fireworks, that could be the potential for some major fireworks if one or both of them misses, particularly Apple, because Apple is the biggest driver of the stock market, and it's held up really well too. I mean, imagine how much lower the NASDAQ would be right now if, let's say, Apple was 20 or 30% lower. Let's say Apple had taken like the path of PayPal and just completely been crushed. Yeah, I mean, the market would look completely different. S&P 500 would look different. The Dow would look different, and the Russell or the NASDAQ 100 and composite. So pretty significant earnings reports that are coming up here. So again, I'm going to go over your charts. Let's go ahead and look over some of mine here. There's some that I want to go over here initially, and we can transition into your charts from there. So S&P 500's had this head and shoulders pattern. It's been working it for a while now. The question is all right, where are we? Do we need to reevaluate where this previous line had been? Before, this neckline had been like somewhere around there. We broke it. But if we bounce here, do we really reevaluate where the support level might actually be at? Because here you have a lot of bounces off of this support level, and that's what I'm more inclined to work from going forward. You also have this potential for like a declining channel here in the works as well. So that's definitely in the works. And what I was hoping for us to do before I had to close out my bearish positions on the market was for us to get a sell-off that flushed price all the way down to like the 407 area. Couldn't quite get that, but that's okay. Here's the thing. The market rarely does what we expect it to do, and it rarely does what we want it to do. That's probably the better way to say it. It rarely does exactly what we want it to. But that's the problem with so many traders, is that they expect it to do what they want it to do. I bought into the stock. Now it has to go up. I mean, you should see it on stock splits. If you say something that somebody disagrees with at times, they completely lose it. Or same thing goes with Twitter. I mean, we see that regardless if it's stocks or not. People have a hard time with differing opinions right now, and it's like they need to be held like a baby or something. But when it comes to trading, you should embrace differing opinions. You should want to see, okay, what are the different takes on this? Because that's what I'm doing. I'm usually, when I'm short on a stock, I'm wanting to hear everything that people have to say about why they're long. And if I'm long on it. I want to hear why people are selling it, because it only helps you in the long run to be able to figure out what's the best course of direction for your trading. So in any case, you have this channel here, but what I think is probably the most important to watch going forward is this support level. Are we going to hold it tomorrow? If not, are we going to bounce? It definitely seems like we're due for a bounce here. I mean, look at this. This is a massive bounce. We're going from the highs of 450 on SPY, so about 4,500 on SPX, all the way down to 417, or about 41,700, 4170 on SPX. So you're talking about a 330 point sell-off overall just since Thursday. So it's a big reversal. So don't be surprised if we do get a bounce. Again, I'm 100% cash right now, so I don't really have a dog in the fight whether or not it wants to go lower or higher. If it goes lower, yeah, that's a little bit of hurts the ego a little bit, because I was like, man, why am I not still in it? But nonetheless, I am looking for a little bit of a bounce here. If I play it, I don't think I'm going to play it for very long. And here's what I'm watching for is on the Qs. So this is the regular hours trading. Let's see how it's doing post market. This is because of your earnings here. There's some strong earnings. So look at this base pattern though, right? Really interesting. I don't want to call it a inverse head and shoulders pattern, but it does have a little bit of that look to it. So what I'm thinking for like tomorrow, let's say we can get back above 322, right? We get right back above this level here. I may take that as a long position. Now, I'm not taking it because I think the market's bottomed. I take it just because we're probably due for some kind of a relief rally. I mean, this is, again, the 5-minute chart of the market. Since last Thursday, I mean, it has been brutal, but you're starting to see that base form. You're also seeing this declining trend line that's broken there, right? So actually, I can draw that a little bit better there. You can see multiple tests. It's tested it on 3 occasions, sold off each time. This was the latest one, and then it broke the declining trend line. So I want to see whether or not now can we get back above this like 322.50 level, and if so, that might be a good opportunity to get long. So where do I put the stop loss at then? Probably below this. If we're going to call it a left shoulder, maybe we call it a double bottom. You can even call it a double bottom. Sure, it's like first bottom, second bottom, right there. First bottom, second bottom. So if it comes back down, okay, I get stopped out at like 315.95. And if that happens, then I'm just taking about what? About, trying to do the math in my head, about a 2% loss. So that's okay. That's well within my parameters. Something. Now, if it works, you have your first issue there coming up at about 320, 329, 330. Okay, if it can clear that, then let's look at the daily chart to see what kind of opportunities might exist. So I do think that there's going to be some resistance. We talked about 330, but also some resistance right in here. So if it bogs down, let's say at like 345, that's still a really good trade, especially when you're considering the reward to risk ratio. And there's different ways to play it. You can play it with the Qs, you can play it with QLD, you can play it with TQQQ. For me, it's all going to be whether or not whatever I use it with, I'm going to use it based off of the reward to risk ratio and what I'm comfortable with. So, hey, we got Jake Gotchi. He closed out SQQQ today for 20% at the open. You know what? If I would have closed it a little bit earlier, I could have been probably around 17 or 18 myself. But I was wanting to see if we couldn't get that pushed lower. I'd already closed out 2/3 of my position, so that was like my ride or die final portion of my trade. So I was trying to see, can we get it to go a little bit lower? It couldn't, so I had to close. But good job, Jake. I always like to hear everybody's success stories. It's great to hear how well you guys are doing, and when you're struggling, I like to hear about those as well. So there's the Qs. Again, make sure you're posting what charts you want me to go over. I love going over everything you guys have to talk about. Now let's look at Facebook here, and I'll get back to IWM in a second. But since we're talking about tech and everything, Facebook reported earnings. We already talked about the numbers, but look at this after hours pop. Really good. It was up as much as 12% at one point. Now, I'm not a huge fan of trading stocks the day after they report earnings, right? Or that first day after they report earnings. Mainly the reason why is because it can be so volatile. Like if you traded Microsoft today and it was up, what, 7 or 8% at one point, closed the day at 5%, but might have even been up more than that. Yeah, it was about 7 or 8%. But a lot of people probably started jumping in around 289, 290, thinking, okay, this is a safe place to be. The market's falling apart. This one's rallying. I'm dumping my money into Microsoft. And then all of a sudden they're down 2 or 3% on that one. So at Facebook, let it settle in a little bit. I mean, this thing's had a lot of drama, man. I mean, it has gone from what, over 380 something a share all the way down to 170. It's lost like $500 billion worth of market cap. So let's look at the chart on this, though. By the way, I do all this stuff all the time. Each day I'm sending information out all the time. Right down below, if you're on YouTube, you can click on the join button below, and it'll take you to all my market research that I provide each and every day. You're also supporting the channel when you do that, so make sure to check that out. So it's got this rising trend line here. Haven't quite tested it yet, though. So would have been awesome to have seen it test it before the close today and then rally right back up after hours. It would have been a nice little confirmation bounce right there. Still may be good enough. I mean, so where Facebook really gets interesting at is if it can get into this gap right here. If it can get into that gap, that's going to be around 247. Most of your gaps like to close, right? They like to be filled. This one's completely unfilled at this moment. But if it can get into that 250 area, and that's a long ways off, you're talking about like another 40 or 20 something percent there. 25%. So it needs to go up 25% to get into that area. So that's a long ways off. But in the meantime, there's a little bit of resistance at 234, but outside of that, maybe some at 211. So there's a little bit of an opportunity for it to move some. But if the overall market pressures continue to push stocks lower, this earnings bounce isn't going to last for long. All right. Then we got QCOM. Qualcomm. I always call it QCOM just because I'm reading the symbols most of the time and not actually saying the company name. But good earnings report. After hours up about 5.6. How did it do on the day? It finished like 1.2. So it's just really about 4% or so that it's up. I don't really see too much of an edge on this chart here that would make me want to trade it, right? I mean, maybe you got like a little bearish wedge there. Yeah, I mean, I can see that a little bit. I mean, this bottom part of the wedge isn't all that great, but nonetheless, there's some definition there. So after hours, it actually went up to the top end of this declining trend line there and then sold off. So it really needs to tomorrow, I would probably say needs to break above 145. And if it can do that, that's a good sign for that stock going forward, especially if the market can put in at least a temporary bottom and give some of these stocks some room to rally. All right. And sectors, okay, over on the right side of my screen here, it might be a little bit of an eyesore, but we had about 7 out of 11 sectors that rallied today. The main leaders were energy and materials. Materials coming in top at 1.6%, energy coming in second at 1.2%. Those were really the two leaders overall today. The ones that struggle the most, real estate, communications, and tech. So looking at materials, this is one that I've liked, but I'm just not getting much action out of right now. I actually have some in a different portfolio that's not for swing trading. It's more of a longer term play, but right now it's not doing much for me. So kind of stinks, but we'll see how it performs in the coming days. I mean, I think there's still some opportunity there. And then you got gold, still struggling despite the material sector doing good, but where you saw a lot of your action at was with agricultural and with farm products. So like ADM, for instance, Archer Daniels. This one went up 470. John Deere up 1.25%. So these did pretty good. Even Caterpillar, which is technically industrials, it had a good day. It was up 1.7%. So that was really where you saw a lot of your material plays running. Not sure where the chemicals were at on the day, but they looked like they were slightly higher. Yeah, about 1.25%. So that also added to the day's gains as well. And then let's look at the VIX. And again, I'm going to get to all y'all's charts here, I promise. The VIX, we have this really, really stubborn resistance level here. Actually, got to draw a little bit better than that. Actually, I think I already drew it right here. All right, this is the resistance level that I think is really important to be watching right now. This resistance level has seen, okay, it's broken it a few times, but it can't sustain that break. Again, it's tested it here, it's tested it here, broke above it, couldn't sustain it, tested it here. Almost every time it's a hard price rejection just at the mere thought of testing it. Well, what did we do yesterday? We tested it, and then we had the sell-off today in the VIX. This was one of our better chances of actually breaking through it, and then within one day, a couple of days, we're right back below it again. So the volatility index, I've been really paying a close attention to this VIX and how or whether price can get back above this resistance level, because I do think that you have that moment for like actual panic among a lot of your bulls and the market. So ultimately, I'm in the short term, and I'm going to wrap up my analysis on the indices and what we've talked about so far, and then I'm going to get to your charts. Ultimately, I think this market is heading lower. That's at least my presumption. I closed out all of my positions today that were bearish, with the expectation that maybe we'll get a market bounce here. It just looked like it was kind of running out of gas some today. Maybe I'm wrong on that. Maybe we do get that flush out, of the bulls tomorrow. But for the moment, based off of the information I can tell just reading the charts, looks like you may get a short-term bounce. But ultimately, I think it's going to go lower, much lower. So, all right, now let's look at some of y'all's charts here. You guys got a whole conversation going on in the chat. Let's see here. All right, Alex. Now I'm going to move my head up so I am not blocking. There we go. Let's see. We talked about the NASDAQ, so I don't need to go over that one as much right now. But looking at X, a little bit of a trend line there going off of the January lows, but it's become quite detached. You remember like February, March, steel stocks were like soaring, man. CLF, X, and a lot of others. Now it's coming back down some. I would want to see, okay, where is it going to hold up? Is it going to hold up this $29, $30 level? If so, it could provide a decent bounce right there. That's what I'm going to be watching for in the days ahead on steel. The only thing that concerns me about this is I get really concerned when we have a trend line, then it just becomes completely detached from that trend line, because then at some point it's going to pull back some. A good point in case of that is actually Netflix, right? Which, by the way, look at this thing. It can't catch a bounce to save its life. 6 straight days down since its earnings. But long term, right? It's hitting these trend lines really, really nicely. And then somewhere around like 2016, the whole thing just goes nuts. You can even say like this trend line here was one that it was following. And then it got completely parabolic in 2020. And then it came back down and it even blew right through that trend line. So I get nervous when you see these kinds of like frothy moves, because usually they're not that sustainable. But going back to X, very short-term frothy move. If I was to play it, I would want to be playing it off of that bounce at the 29.30 level. Then we got SOXS. All right, so SOXS, I'm not a huge fan of just going over the analysis on like these 3x inverse ETFs. I think it's better to go to the source, which I like to follow SMH. This is like your semiconductors ETF. It's going to house most of your really, really big semiconductor companies. So right now it's got a bit of a toppy pattern, right? Similar to SPY, similar to the NASDAQ. You got your left shoulder, you got your head. And yeah, for a long time, we all thought that was going to be the right shoulder. It looks like it was more of a continuation of the head. So you got the left shoulder, the head, and then you got the right shoulder, and it's confirmed it. So where's the next layer of support? I would be watching. Let's see, is it testing it actually? Not quite, but it's getting pretty close to it. That's one level of support. If you can hold that, that would be great. Then outside of that, and this is the case with a lot of stocks right now, there's not a lot of support underneath, because we've just made such monstrous moves almost in a nonstop fashion among most of your tech plays since 2020. So where does it fall to next? I don't know. I have a feeling that a lot of stocks, either they're going to like just crash and burn, or they're going to carve out a support level somewhere in this area here. It's going to be unrelated to other support levels, and it's just going to find a level of support that the buyers just jump in at, and they're going to be like, look, we've had enough. This is too much of a bargain. We're buying it now. So I know that's kind of right in the fence there, but when it comes to trying to find support underneath, it's just like hit or misses. Like you can say, all right, maybe that's a support level, or maybe that's a support level, right? Or maybe this is a support level, but they're just like onesie twosies. There's not like a lot of tests and retests and something that you can go off of long term. I mean, if I even tried to go the abnormal route and say, okay, maybe there's some support right there. That could be one. Who knows? It's as good as any. Probably better than the other ones that I just laid out. So maybe it goes down to 201. I don't know. But yeah, SOXS, these things here too, they're not really meant to be held long term. I mean, the chart looks good. I mean, it looks like it's trying to break out there. Today wasn't the best of candles, but if it can hold that, well, I think it had a different, yeah, it actually broke out today, but it's head faking a little bit after hours. But it needs to hold that breakout level. And then Alex, LMT. Taking a look at this one. These defense stocks, I was looking at them earlier today, like LHX, NOC, LMT. They've held up pretty well. LMT is one that I want to add to my watch list here going forward. I actually think that's a nice one. I don't know when they actually report, though. Let's see here. Earnings on July 25th. So it looks like they've already reported. So it's followed this trend line. It got a little bit frothy, but what did it do? It came back down to the trend line pretty hard. And so far it's holding. You got a little bit of support at that 50-day moving average too. So for me, if I'm going to play this one, maybe I get in like off of this rising trend line and then maybe place my stop loss below the recent lows, which would be Monday's lows. That would be like 433.25. I'd put my stop loss and just see where it goes. It's a good looking chart. I mean, that's one of those that's really not that bad considering everything that's going on in the world, considering the market might be ready for a near-term bounce. This might be one that bounces pretty decently. And when I'm talking about the other ones, I mean, LHX, yes. This one doesn't look near as good. I mean, it's broken that same kind of trend line there, so I'm not as crazy about that. But overall, though, it's still holding up pretty well relative to what we're seeing in freaking Qs. Oh, by the way, I don't have the bottle with me. Drinking Buffalo Trace. Do I have it? No, I don't. Buffalo Trace, man. Really good, but hard to find, man. And I don't want to pay like $50 a bottle. This is really like, you shouldn't pay more than $30 a bottle for Buffalo Trace. You just shouldn't. And I think if you do like the Kentucky Bourbon Trail, it's pretty good. You can get some bottles there. I don't live near Kentucky, but such a good one though. All right, so we're talking about the Qs. We're talking about SMH, talking about the defense stocks. What else you guys got here? I don't know if this is just like short for something or what, but nope. NTR. We were talking about agricultural stocks being pretty good today. I mean, this one's no different, up 2%. Where do we get long on this one, though? I don't know. Again, I think maybe this, and I think we're going to see more and more of these as stocks break some major support levels, and there's not a lot of like obvious support levels underneath. You might be finding like the top ends of old trend lines that come back into play, because like you take NTR, right? This is a stock that was pretty predictable and pretty much stayed right in this channel. Let's just, for instance, take that out of the equation, that big move. Pretty good, right? I mean, pretty steady move all throughout. Then it just goes absolutely ape. Look at that. Huge move. I mean, you know reasons why it went so crazy with everything going on overseas with Ukraine and Russia. But this one here, though, I mean, definitely my heart doesn't want to say that it would go down that far, but I just don't know any other place to really get long on it unless it came back down to this upper channel. So maybe like 85, I'd become interested in it. That's assuming that the market's holding up too, which it's not right now, up for obvious reasons. Teams trading. All right. BP. I had one today that I was looking at and it was pretty intriguing, and I'm trying to remember which one it was, but BP's actually intriguing too. I'm glad you brought this one up. I'll add this one to my watch list as well. I don't know when it reports earnings. Probably already did. A lot of your oil stocks already have, but nope. All right, we're dying. I'm going to draw that upper channel band. But check this out, though. I mean, repeated bounces off of this rising trend line. This one's pretty nice. So I think if it breaks below this rising trend line here, and you got the 200-day moving average as well at like 28. So maybe if it breaks below 27.90, I wouldn't want to be in it any longer. So there's a decent reward to risk ratio. And we talked about gap fills earlier. This one's got a gap fill of its own right there. So really nice. Good chart, man. Good job, teams. We got MU. This one I don't like. So there's a couple ways that we can look at it right now. Massive double top, right? First top, second top. You could say that it's getting ready to confirm, or maybe it holds the support level. I've drawn it different ways in the past, like right here. I'll go back to this chart, but you could say, okay, it broke that rising trend line there, but this could be a support level to bounce off of. But if it doesn't, then it becomes a confirmed double top. So the reason why I say you never know if they bounce off of there, because over the years, we've seen so many hard bounces off of head and shoulders patterns. That would be the neckline of the head and shoulders pattern. And for reference, this would be like a neckline of a head and shoulders pattern. Hard bounces off of them. So there's the potential for that with MU, especially when you're looking at SMH trying to rally after hours. Let's see what that does to MU. Yeah, it's trying to bounce a little bit as well. So that's another one. This is a stock that I would put on both my bullish and my bearish watch list because I think it can do either or. Aaron Sundays wanting some Coors Light here with TAP. That makes me want to drink a little more Buffalo Trace. Okay, so with TAP, there's another trend line there. So before I get too into the technicals of TAP, look at some of these runs that a lot of your beverages have had. KO, MNST, this one being this rising trend line here back off of the March lows. Same thing with KO off of the March lows. PEP off of the March lows, really good. So maybe TAP, probably doing a little bit better. This rally starts all the way back in December, and it's just been chugging along quite nicely. I would think there's two ways to skin a cat, right? I mean, you have some support there at 52, or you can be a little bit more picky and say, okay, 51.65 or so. So I think you could probably play it off of this one, because if you stay in it long enough, eventually this rising trend line is going to catch up anyways and offer up that support. So I would, for me, I'm looking at 52.38, maybe a stop loss below the April lows. So good stuff. Again, I don't know when this one reports earnings, but I like that TAP. Oh man, Wilderness Trail Bourbon. I'm trying to think if I've had that stuff before. RBLX. Dude, Nancy's got to be sweating bullets on this one, guys. Didn't she have like I don't remember exactly. I thought it was, she had like a couple like $1 million in calls or $1 million in calls on this sucker. I mean, and that was like what, back in like January, February, I thought. Man, she's got, bet you those things are worth crap. Declining trend line, it actually broke it, but then it just continued the trend line lower anyways. But man, this thing can't get any love at all, guys. But yeah, I mean, like this. So you take something like RBLX, or you take Spotify. It's like an uncharted territory. I don't know. I mean, it's just, I think Chewy's the same. No, Chewy's not the same. Which one was the other one? Oh, it's Hood. I mean, these stocks are just like sitting at the lows or near or making new all-time lows. Man, when it gets down to these levels, it's almost impossible to know what they're capable of, because I mean, this thing's just in a complete free fall. There's no support. Where are you going to draw support at? I mean, right there. I mean, that's broken too. So this is why it is really, really, really important to use stop losses as a trader, because it really keeps you out of some really bad messes. I mean, you want to know what my first trade of the year was? AAPL. Embarrassing? Probably. But I don't even know why I got into it. I think I was probably playing this little cup and handle pattern action right there, and it definitely did not confirm. It looked like it was going to confirm. But look, I mean, I got out probably like 191 or so, if I remember correctly. It was like 191, and you can check it on my website. But it's now at 84. I've been like down over 50, like what, 60%? Heck no, I don't want to be in that. So you can see stop losses work, man, because I don't trust my ego. I don't trust my ego. I don't trust myself to cause complete destruction in my portfolio. So I'm going to use stop losses. Do they suck sometimes when they hit and then you see them go right back up? Yes. That's kind of like the cost of doing business in the market. Those things are going to happen. Again, don't make me have to tell you about how I got stopped out of LinkedIn on a Friday afternoon at 3:30 p.m. only to find out that it got bought out by Microsoft on Monday. Yeah, that wasn't a good day. Keyboards were suffering that day. Okay. Gosh, that was bad. It's going to kill the mojo of this live stream if I keep talking about it. FedEx. Declining trend line there in place. It's not like perfect decline trend line. I probably a little bit sloppy on the draw there, but it's still intact. It's trying to hold those lows there, right? Oh, man, it looks like it's just barely doing it too. Look at that. Just barely ahead above it. Now, I like to see where it closes in relation to a support level. Just because it breaks below it intraday, it can actually be a sign of strength that, hey, these buyers are wanting to hold this thing no matter what. Even if it breaks below it, they're wanting to get back above it. So for now, that's the case. If it breaks below it and closes below it, that would be a red flag there going forward. Maybe it bounces. If it bounces, I would start looking, for me at least, maybe like 213, 214. That would be a good. I mean, it would be like 7%, and wouldn't have to even risk much on that trade. Maybe like 196. Again, check your earnings when they do these things. So that was FDX. Let's see here. We got NVNXF. What the heck is that thing? NovoNix. All right, 375. I don't trade a lot of stocks under $10, but that's all right though. We'll look at it anyways. Head and shoulders pattern right there, right out of the gate. It's a little bit sloppy right there. I think we saw the same thing back on February 24th. Yeah, that's the February 24th candle there where the market just bounced right back up. Left shoulder, head, right shoulder. Can it hold 343? That's going to be the neckline. Remember what I was saying earlier? These head and shoulders patterns, left shoulder, head, right shoulder. Historically, about the last 12 years, I would say, with all this Fed intervention, man, stocks have bounced hard off of these head and shoulders patterns. So don't say it's confirmed until you see maybe like a break and a little bit of follow through to the downside. Because, I mean, like even with like SPY, right? Broke above it, below it, and now here we are right back above it again. So ORGN. Let's see here. Quite the resistance. Doesn't seem like it wants to break through it just yet. You got a little series of higher lows and higher highs, but it's breaking it, right? So that's a little bit of a cause concern. But then the next level has to be, does it break this level right here? So we're sitting at about 616. Break 616, that becomes a new lower low on the chart. That would be a red flag to get out. So lots of resistance there. It needs to really break out of it before I would even consider getting long on it. All right, so we got a tax question. I'll be frank with you guys. I don't know anything about taxes. I just trade. But I mean, a lot of people are getting their heads handed to them right now because they bought and they had all these gains from 2021, and they made all the money off of the meme stocks like GameStop in January, AMC in June, and then you had Build-A-Bear and all those other ones that went nuts. And then they lost it all in the first 3 months of trading, and now the tax bill is due for 2021, and they don't have anything to pay for it. All right, Isaac, man, how you doing? BRCC. And this one has taken a beating off from the 30s all the way back down to 15. So some questionable support around this area right here. Right? I mean, it's like it's trading right on that support level. Broke it yesterday, tried to reclaim it today. I don't know, man. I'm worried about that might be some resistance going forward. The next level, all-time lows. And that's where it gets into like really uncharted territory. How low can it go at that point? Because there's really no support level that you're working with. You're just looking at, all right, we broke it. We're in uncharted territory. I don't know how low this can go. That's the same situation that like Spotify is in. And we were talking about another one that's already escaped me. But BRCC kind of scares me in that regard right now because really nice run up in March. And that was with the whole war breaking out and everything else. A lot of these agricultural stocks and food companies, they rocketed, right? But now it's coming back down. That support level is going to be very, very key going forward. Alex, great time to be here. First time, mate. Can you look at VAC? Looking for a support breakdown. All right. I don't know, man. There we go. My charts just like faded out there for a second. Looking at Bank of America. Some support right there. 36. So it's testing it right now as we speak. That's some heavy support. Declining resistance above. So even if it does bounce here, you got to contend with this declining support level here, or declining resistance. Needs to break above that for you to really get bullish on the chart. Right now, this doesn't look good, especially if it breaks. Then where does it go from here? And this is what I was telling you about. Like, okay, we have a rising trend line, and then it just gets really frothy and just goes ape, right? And now it's coming back down. Maybe this next level would be real close, actually, around 35, 34, 85, 35. Let's just say 35. So that would probably be the next level. And then, again, I'm drawing these charts live for you guys here. Sometimes I'll go back and I don't even have any references on this one. But yeah, this is going to be another $30 will be another support level there. So I would watch those three levels going forward. Breaks below those, you got some real problems in the market. Review on WM. Jeez. Beauty, huh? This is what we all want to be in, these kinds of plays, right? That are actually bucking the trend. Waste management. Everybody's got to have their trash still picked up, right? I mean, really, I mean, like the worst economy, somebody's got to pick up the trash. Otherwise, it'll look bad. It'll look like, I don't know, the streets of Baltimore or something, man. I've seen some videos on Baltimore. Holy cow. No offense to people in Baltimore, but man, they got to clean that city up some. All right, so long-term trend line off of the March 2020 lows has been solidly intact. In fact, it almost pulled back to it in late February, but no go, man. It just bounced thereafter. So now it's breaking through. This is a breakout play, a very rare breakout play in this kind of market. So for me, I want to make sure, is it going to head fake? I don't want it to head fake. And if it does, is this like earnings action here or what? No, it's just, I wasn't sure if this might have been like an earnings report for it or not. But what you don't want to see is it like give up all the gains from today and start breaking below like the lows of 164.55. Does that? That's no good. Let's see. We hit BRCC already. We got Apple now. Remember, they're reporting earnings tomorrow. Even Apple, I won't trade through earnings. I just don't. Not as a trader, I won't. I mean, if it's a long-term investment, you got to hold it longer than 3 months for it really to be a long-term investment. So, so you're going to go through some quarters there. AAPL. I'm just going to pull up one of my old charts for it here because I think it's still very relevant. You had this bull flag, it broke out, and then it broke right back below the bull flag. So is the bull flag really relevant at this stage? No, because it couldn't hold it. It was basically a 4 or 5 day rally, and then it just gave back all the profits there. So we can actually start to take this off. And now the big question is what does it do? Because it tested the 200-day moving average yesterday, and it broke below it. And just look it up for regular hours here. It broke below it and still couldn't recover it today. It did for a moment, but it gave up all those gains into the close. So you got this rising trend line that's coming back into play at around 151. I would be very interested, especially if it lines up with the overall market bounce, to try and maybe play this off of this 150, 115, 151, 25 level, because that trend line there has been pretty solid going back to what, 2020? Yes, do I trade for a living? Yes, I do trade for a living. Plus, I do a lot of other things on the side, trading related. I mean, and that's one of the things that I think people should really consider if they want to trade for a living. Swing trading in particular can be really boring. There can be a lot of times where you don't trade. I didn't make a single new position today. I closed out some positions, but I didn't buy anything at all. So if that's all I'm doing for a living, there's a lot of downtime unless you like that, and that's fine. But that's why I have podcasts. That's why I'm streaming with you guys, because I'll get cabin fever, man. I gotta do something else with my time. So yes, I trade them, but I'm also incorporating the research and everything else that I do to provide you guys with these live streams, videos, podcasts, shareplanner.com. So thank you for letting me do that plug. TDOC. All right, so let me just go back to this one here. Sometimes those white lines bother me. Oh my gosh, you gotta be kidding me. Give me those. There we go. So we have a downtrend in place, right? Do we? No. Well, boy, this one's splitting hairs here, guys. So we got the downtrend here in place. Tested it, sold off. Looks like we tested it here, and now it's just riding the underside of this thing. Okay, so knowing that, let's go ahead and remove it. We know that this is basically a major downtrend that's in place, and it's riding right underneath the underside of it. Then you got kind of like a little wedge pattern right there. So can it break above this wedge pattern and then as well break above that declining trend line? If it does that, maybe there's an opportunity for a short-term bounce. But again, stop losses are key, guys. Stop losses are critical. So talking like 54.69. I mean, there's really nowhere else to put it except unless you want to go below the March lows, and that gets, more than 10% away. The future of Disney seems to be going down. Man, I grew up going to Disney. I've gone to Disney so many times living in the Central Florida area. There's a lot of headwinds there with Disney. I think somebody was saying the other day that the price is trading below when they launched Disney Plus, which is crazy because the hype behind Disney Plus was huge. Now, I mean, this stock it's gone from like over $200 a share down to $115. So it lost over half of its market cap. Where does the support levels lie? Could say that was a key support level. I mean, it doesn't mean it has perfectly held the support level, but there's been a number of times where it was rejected by price there. But look, I mean, it's trading below it now. So I don't know how far this one falls, to be honest. There could be some support. I mean, it's only violated this support level once, and that was during the March 2020 sell-off. Maybe it finds some support at this like 107, 108 area. That's what I'd be watching for. Future Disney, I mean, I still think they'll be around. I mean, I don't think they're moving out of Florida anytime soon. And even if they just shut down all their theme parks, it would be a blow to the stock. But I mean, they're so invested in media right now as well. I mean, they own all these channels. They have production studios, Disney Plus. I mean, I think they'd still be okay. Let's see. I already did the Facebook chart, EOG, so check that one out. The live stream will be replayable. It was towards the beginning too. So yeah, Disney just did that one, and CRSP. I don't mind doing that one for you. Okay, CRSP. I know a lot of people that were buying this sucker back in the day. And frankly, I mean, this is probably the best support level that I can find on this chart. I'm not a huge fan of trading biotechs in general, but this one goes back to 2018. If you pull up the weekly chart, you can see it much more precisely here, and then again here and here. So can it come back down to this 46.50 level and then maybe get a bounce? That would be ideal. You got to also reconcile this declining trend line off of what, the 2021 highs. That was an amazing run, by the way. But it's lost over 75% of its value. It's amazing. You're starting to see a lot of stocks that have done that, but it also makes you wonder. It's like, how many stocks were just built up on false hopes, right? I would watch on this one, 45.64 level for support. Can it break through 74? Golly, that's a wide support or wide trading range there. If it's going to go anywhere, it's going to have to ultimately break this declining trend line. All right, guys. So let's talk about some takeaways here. What we're seeing in the market. Does the market continue to sell off? Does it finally find maybe like a short-term bottom here and rally some? That's a hard one right now. I mean, I covered my positions because I felt like the reward to risk ratio wasn't really on my side this time. And if the market rallied today, and then you get the follow through to tomorrow, then there was like, I was at a point where I was like, okay, I'm giving back a lot of gains, more gains than I'm comfortable with. So I went ahead and closed out my positions. I'm fine with it. I'll sleep well tonight, and then I'll be able to look at the market tomorrow based off of what it did overnight, see how the first 30 minutes plays out, and go from there. I continue to tell people, like, less is more in this market. You don't have to make a move on every kind of reversal that you see, both intraday and on the daily charts. If you do it, you're going to get whipsawed a lot. So you want to make sure that you're continuing to practice risk management. If you're unsure about the direction, just hold off. I mean, just say, you know what, I'm going to just wait until it becomes a little bit more clear. Let the markets come to you. Don't force your will on the markets. And yeah, like Barry said in the comments, have peace of mind. Make sure you've liked this video. Make sure you go back and watch some of these other ones. There's a lot of great content out there. I'm doing about 2 videos a week plus 1 live stream, and I'm trying to incorporate more of the shorts as well to try to give you guys some quick stuff, maybe some more educational content as well. But yeah, hit the like button, subscribe to this channel so you guys can constantly be updated. And thank you guys for listening and putting up with me during this whole time, and God bless.